Welcome to our Winning in Retirement classroom session right from our Forest Hill recording studios. My name is Jeff Akers, a certified financial planner practitioner at Akers Financial Group, and today I'm going to be talking to you about required minimum distributions, or RMDs. Now, if at any point during this webinar you have any kind of questions, please email us at info at akersfinancial.com. That's AKERS financial.com. If you send an email there, one of our advisors will get back to you. All right, so let me show you our screen. So the first thing I need to do is a couple of disclosures, things that are required. And the main thing that I want you to take away from this is the information I'm giving you today is general information. It's not advice. It's not specific to you. So I'm not telling you what to do right now. We'd need to sit down together, go through your situation in order to come up with the best plan for you. But today we're going to be talking about some general information. So what is a required minimum distribution? Really, it's a point in time where you have to start taking money out of your retirement accounts. You put money in on a pre-tax basis. The money has been tax deferred. You haven't had to pay any tax on it. And eventually, the IRS wants to collect those taxes. So they make you start taking money out of your IRA or 401k or whatever so that they can collect taxes. Now, one of the questions that's come up over recent years is, when do I have to start? For a long time, that age was the year that you turned 70 and a half. That was the year when you had to start taking money out of your retirement accounts. Then they raised it to 72. Now they've raised it to 73. Unless your birthday is in 1960, you were born in 1960 or later, in which case it will be at age 75. So the timing of when you have to start taking these distributions has changed over the years. And if you're a little confused about when you have to start, just come see us and we'll help walk you through that. So how do you figure out your required minimum distribution? How do you calculate that? Well, the first thing that you need to know is the value of your account, that IRA account or 401k account, on December 31st of last year. That's the first thing that you need. The second thing that you need is a divisor, or a distribution period. And the way you find that, you'll see this uniform life table, is to find your age. How old will you be at the end of this year? So when you have your birthday this year, how old will you be turning this year? And then there's a number next to that, and that's the distribution period, or the divisor that we're going to use to calculate your RMD. So we take that December 31st value, we divide it by this distribution period, and that gives us your required distribution for the year. So let me show you an example of that. Here we have someone who's 73 years old. So their divisor is 26.5. They have 3 IRAs. One's worth 500,000, one's worth 100,000, and one's worth 50,000. We take each of those and we divide it by that 26.5. Now, when we get to the end, we can add that all up. $24,528.30 is the total required minimum distribution for this person's IRAs. So what is aggregation? You'll notice on that example that we listed all the IRAs. We calculated the RMD for each one, and then we added them all up. Well, that's kind of aggregation. We can add them up. So with IRAs, we could take that $24,000 from any one of those 3 IRAs. Let's say one of them went up a lot. That's the one we might use to take that required distribution from. Another one might have gone down. Well, we don't want to touch that one. We want to allow it to recover. So we can pick and choose which IRA we're going to use. 403Bs are similar. We can take our 403Bs, figure out the RMD for each one, add that up, and then we could take that distribution from any one of those 403Bs. Or we could spread it over all of them. We can take it however we want, as long as it's from a 403B. But when we get to other employer-sponsored plans like 401ks, TSPs, and the like, we're not allowed to aggregate them. So if a 401k has a required distribution, we have to take that required distribution from that 401k. We can't take it from any other account. So you'll see on the little chart over there, each 401k and the TSP, they've got their own little RMD that we have to take from there. You'll also notice that between the IRA, the 403b, and the other retirement plans, you've got those lines. Each thing has to sort of stay in its lane. So you can take IRA distributions from any IRA. You can take 403b distributions from any 403b, but you can't take a 403b required distribution from an IRA. The 403b distributions have to be from a 403b. So what if you forget to take your required distribution? Well, there's a penalty. The penalty used to be 50% of what you were supposed to take from the IRA. So let's go back to that example, $24,000, 50% would have been a $12,000 penalty. Well, now they've lowered that penalty to 25%. So instead of a $12,000 penalty, that would be a $6,000 penalty if you failed to take that distribution. But let's say that you realize it pretty quickly that you forgot to take it and you hurry up and fix it. You hurry up and take that out. Well, they've changed that. If you correct the problem within the first 2 years, now the penalty is 10%. So now instead of $6,000, that penalty is going to be, what, $2,400. And then when we fix it, we have to file form 5329 with the IRS. That's an IRS form 5329 that talks about extra taxes or additional taxes that we have to pay. And we can send a letter with that form requesting a waiver of the penalty. Historically, the IRS has given that waiver quite a bit, as long as you find the problem and fix it quickly. But that letter, you're going to want to state what happened, why it was missed, that you've taken out the required amount now, and what you've done to make sure that it doesn't get missed in the future. So getting this put together, you might want some help to put that together, and that's why we're here, to help you try to get that waiver from the IRS. So that's one of the ways we can help you, but how else can we help you? Well, we can calculate that required distribution for you. For our clients, the IRAs that we have, we automatically calculate the required distributions for them. For accounts that they might have with a 401k or whatnot, we can help them to calculate those as well. We can also help you figure out what's the best place to take a required distribution from. We talked about aggregation before. Maybe one IRA has gone up, so we're going to take the distribution from it, and another one's gone down, and we're going to leave it alone and let it recover. So we help you with those decisions. What's the best thing to use for your required distribution? We also help you plan before that required minimum distribution age. So before you reach your 70s. One of the things that we like to do is convert some to Roth IRA. By doing a Roth conversion, now the money that's in the Roth IRA will not be subject to required distributions. It'll be tax-free when you take money out in the future, down the road. And it actually lowers your required distribution from your regular IRA because you've lowered the amount that was in there. Once you have started taking required distributions, you can still do a Roth conversion. However, you have to take the Roth conversion after you've taken your RMD. So you have to take that out first, the required distribution out first, and then convert above that. So it results in a little bit more tax because you cannot convert your required distribution. And then we can help with inherited IRAs and Roth IRAs. You might say, someone passed away and left an IRA to me. Do I have to take required distributions from that? And the answer is yes. And we help you figure out how much and how to make that work. That would be a whole other webinar that we could use to cover that, but we can help with those things as well. So I want to thank you for watching today. If you have any questions, again, you can email us at info@akersfinancial.com. You can also give us a call. You've got the numbers there on the screen, the 410-692-9870 and also 833-WIN-RETIRE. So you're always welcome to share these classroom session invites with friends and family. So feel free to share the invite you got for this one with your friends and family who might like to know about required distributions. And you can listen to us on the radio on Saturday mornings. The show is called Winning in Retirement, and it's on WCBM 680 at 10 o'clock on Saturday morning, and it's on 105.7 The Fan at 11 o'clock on Saturday morning as well. You can also watch past webinars and hear those radio shows through our website at www.akersfinancial.com. The radio shows are also available through Spotify, Amazon Music, iHeartRadio, and Google Podcasts. So there's a lot of different ways to get that information. And you can watch your email for more upcoming webinars and client events, things that are coming up in the future. So thanks again for watching today, and have a good day.